In case you guys missed it, I just came out with a video just the other day titled Why I Shorted $11,000 worth of Tesla stock, which I'm highlighting right here. And I made that decision for a couple of different reasons. It was because I thought the company was overvalued. While I think they're a fantastic company, I think it's a bad stock. Because this company is a great company. But as of today, even after today's horrible downturn of negative 6.81%, it is still an $886 billion company. Still almost $1 trillion valuation for a company that's only doing annual revenue of about $50 billion. Now they are planning to grow, they are planning to scale, but I did close out that Tesla position, and I did it today by selling it at a price of $69.06 per contract for the June 2023 $300 puts. Now this closed out a total profit of $3,059.99 right here, and this is what I'm doing so far in 2022 year to date. Now I think that so far we are positive, but that's not a huge celebration. But then again, it's not so bad considering we're in 2022, but I have a lot of open positions that are in the negative, like you see from my portfolio holdings right here. This chart titled Holding Weighting shows my new updated portfolio with selling those Tesla puts. It did have a huge weighting in my portfolio relative to the risk that I normally take for a position such as this, but we sold out of it, we took our profit, and I want to talk about that in this video, what I use that money for, where I think the market's going, and do I think Tesla stock will continue to go lower, or do I think that now it's at a bottom since I did sell out of my puts and I moved on and I moved forward. Thank you guys so much for tuning in. If you haven't seen me before, my name is Jordan, I'm a Millennial Investor, and I have lots of referral opportunities, including the ones that are down below in the description, including that $10 M1 Finance referral, which 126 people have signed up for so far, so check that out. If you want to see my current balance, which includes the big green day today, thanks to those Tesla puts going well into the money, we are at $38,000 almost exactly. My year-to-date performance, which will actually update on the next video. Right now, year-to-date, we are negative 10.85% as of September 1st. By the time you guys watch my next video after this, we will have an update on this, and I think we'll still be negative, but we'll be in the low negative 10% range, about even, but considering this month has been horrible for the markets, we are now well past the markets, so stay tuned for that on the next video. But thank you guys for tuning in. If you haven't seen me before, I'd invite you to subscribe, and without further ado, let's go ahead and jump into Tesla stock. Now, I talked in my last video, the one that I mentioned, this one that says why I shorted 11,000 worth of Tesla stock. The company is a great company, but the stock is overvalued. It is just crazy what people are willing to pay for full self-driving opportunities and electric vehicles. This company is scaling great. Its market share is growing in both US, Canada, China, and Europe, but a lot of the revenue is becoming less valuable as the dollar has become stronger, foreign revenues have become less valuable, and more importantly, I think these expected growth rates of 40, 50% and profitability growth rates of even almost 100% some years are going to come to a slowdown. If you look at the annual growth, the last year, it 7x'd its profitability in 1 year. I don't think that's going to keep up in the future. But more importantly, I think that lots of things are going to prevent this growth rate from continuing, not only the business itself, but the economic environment that we're in. Right now, the federal funds rate, it really looks different comparing this to other timelines when you consider how fast this has gone up. When you look here in 2018, when it got up to a peak of around, what was this, around 2.25 to 2.5%. That took from the start of 2015 all the way into mid to late 2019 to even reach that level, so about a 4-year period. Today, in less than 12 months, we've not only hit that, but we've actually surpassed it, now reaching 3 to 3.25 target rating in about 6 months or so. Originally starting back in March, 6 months later, we are now at 3+% rates, and it doesn't look like it's going to be stopping anytime soon. That obviously hurts many different people and many different companies in the stock market and in the world, but it especially hurts ones that are vehicle makers. Vehicles are heavy, expensive, high-end purchases, especially electric ones, and it's going to be hard for people to fork up the cash. The good news is Tesla's going to weather the storm. They have plenty of money on the balance sheet, $18.92 billion to be exact as of last quarter, and I think it's a great company, but once again, I don't like the stock. Now, what did I use this money for? We'll be talking about this in the next video. I'll be giving details, but I just bought 100 shares of Google. I think that Google right now is the opportunity of a lifetime. I think that it is a great buy, and I think it's one of the most undervalued stocks in the market. Google is one that I've wanted to buy for a long time, but it's just never one that has been the right price for me. If we hop over here to M1 Finance, you see that companies like Tesla have pretty much gone nowhere. They've went down year to date. If you factor in today's negative rate, they're down 18% year to date. On a 1-year period, they're actually up 9%. But companies like Google, which are still growing their revenue, still growing their profitability, year to date is down 30%. But while Tesla may or may not hit its massive growth rates, the one thing I can assure you of is that Google will still be profitable and will still continue to grow. If you look at the most recent quarter, actually let's put this in our calculator because I'm actually curious myself. If you look at the most recent quarter of growth, the last quarter they put up $69.69 billion of revenue. If we put that in our calculator here versus last year's quarter in the second quarter, 61.88, they grew, let's see, 69 divided by 6188. They grew 12.6% year over year in the most recent quarter, and this is in a time of recession. And the profitability so far has been coming in pretty nice this year as well. While it may falter a little bit, it's still heavily undervalued considering how high the free cash flow yield is for this company, yielding over 5%. But we'll talk about that in another video. But long story short, I think that the markets are finally getting close to where I consider it to be a bottom. The S&P 500 year to date is down 22%. From peak to trough, from its highs to its lows, it's actually down about 25%. And I think that we're finally nearing a bottom. Not only is this down 25% from peak to trough, but we have about 9 months consecutively now, just straight down. And anytime you have 9 months worth of economic progress just withered away while we have the stock market falling a fourth in value on average, I think that bodes well for an opportunity to buy these types of companies. If you look at companies like Google, what was their 52-week high? If we hop over here to Google stock, you can see that year to date, this company's down 30%, like I said, and its all-time high was around, let's see, right around $150. Today, I bought it for $97. So this company, I bought for about a 35-40% discount, which is far below what this company's all-time high was at. So I think it's time, like companies today, Tesla needs to be shorted. If you want to find companies to buy in this market, I think ones that have not been hit very hard, that ones that are still flying high, like a Tesla, do not have great value opportunities. They're still up 1100% in the last 5 years. In the last 2 years, they're still up 111%. And while the company may continue to grow, I don't think they're going to hit the growth rates necessary to justify this type of valuation. So overall, guys, it's one that I did get out of. I did make $3,000 worth of profit, and that did move my total year to date booked gains and losses finally in the positive. So the crappy part is it looks like I'm going to have to be paying taxes again this year. That's the bad part. But while Tesla will continue to scale, they will continue to be profitable and a great company. When you have the Fed hiking rates like this, and then valuations finally starting to reach a level, especially for growth stocks that are becoming more and more reasonable, it just makes more and more sense to sell stocks like Tesla and reinvest that into more companies that have been hit hard, like the ones I'm buying, which is Amazon, which is down, let's see, 29% year to date, or me buying Salesforce, which year to date is down, there it is, 40.9%. So these are the type of companies I want to be buying, and Tesla is the type I want to be selling, which likely is the reason why I continue to make put option money off of this company. But other than that, guys, thank you so much for watching. Just wanted to give a quick update there. If you haven't subscribed down below, subscribe and check out all the stuff down below in the description, which gives you $10 and you help support the channel. Thank you guys so much for watching, and I'll catch you guys next time.